Welcome to this Spokane housing market update for March 2023. This is one you're going to want to stick around for because the market is shifting. So even if you're not planning on buying or selling real estate in the near term, it's important to understand what the market is doing right now. My name is Phil Wells. I'm a real estate agent that likes to keep up to date with the market, and I want you to be as informed as possible too. In this video, we're going to start by getting a national picture of what's been happening. We'll look at pending home sales, mortgage rates, and mortgage application rates. We'll then look at data from my local market, Spokane, and compare and contrast the two. We'll then move on and look at some real estate news that stood out to me this month before trying to piece it all together at the end and see if we can make sense of the market and what it means for you. Quick plug before we get started, if you don't already, go and follow me on Instagram. That's where I'm most active. I post real estate tips and news throughout the month so you can keep up to date there. So let's get into it. Looking first at national pending home sales for existing homes. Just a note on the data and figures that I use throughout this entire video, they are the latest that are available, but there is often a lag when it comes to reporting this sort of data, particularly at the national level. So, for example, the pending home sales we're about to look at detail pending home sales from January 2023. Contract signings were up in January a healthy 8.1% from last month, which is the biggest jump I've seen for a while. Year over year, contract signings declined 24.1%, which does represent 20 consecutive months of year over year sales declines. Just remember, mortgage rates in January of 2022 were in the mid 3% range, so that year over year decline there can be pretty readily explained. So overall, pretty positive news there when it comes to pending home sales, which is a welcome change. In the West, where I'm based, sales increased 10.1% month on month and declined 29.3% year over year. They're quoted as saying an extra bump occurred in the West region because of lower home prices. So here's what the National Association of Realtors chief economist had to say about January's pending home sales. Buyers responded to better affordability from falling mortgage rates in December and January. Home sales activity looks to be bottoming out in the first quarter of this year, before incremental improvements will occur. But an annual gain in home sales will not occur until 2024. Meanwhile, home prices will be steady in most parts of the country, with a minor change in the national median home price. I've been talking for a while now about a window of opportunity, and there's still a breeze coming through that window, but it is closing. I've encountered just this month several multiple offer situations. Some I was able to win, but a couple I also lost where people weren't prepared to compete or simply couldn't compete. The economist we just quoted mentioned that national median home prices are decreasing. Here in Spokane, that's certainly true, and I think what's starting to happen is as these home prices drop, people's monthly mortgage payments are actually starting to make sense, even at 6 to 7% mortgage rates, and we are starting to see some competition, which suggests there is some strong underlying demand there. Right now though, if you're a buyer, I still maintain this is the best window of opportunity we've had in the past few years to actually get a property that you want under contract the first, maybe the second time, get a good purchase price while doing it, and in the future combine that good purchase price with a great mortgage rate. And when you are able to complete that refinance, you'll find yourself in a really strong position, both in terms of home equity and a good affordable monthly payment. Ask yourself this question. In the future, would you rather be sitting in the peace of your own yard refinancing the home, or scrambling around trying to buy a home, competing in bidding wars, and generally having a miserable time? So let's move on and look at mortgage rates. We all know that most people use a mortgage, and we all know that mortgage rates are very high. But by the time a mortgage rate actually makes the headlines, they're already out of date because mortgage rates are fluctuating daily. The best we can do is to keep an eye on trends, and that's what we'll do right now. Sticking with January for a second, so we can really analyze that period in time. Mortgage rates at the start of January were at 6.45%, and by the end of January they were at 6.17%. The most recent rates that I could see have risen back up to close to 7% and are at 6.95%. I mentioned just a moment ago that I believe home prices have fallen enough now so that people's monthly payments actually make sense, even at these high mortgage rates, and that some competition is really coming back. That doesn't mean that it's impossible to ask for seller credits or ask the seller to fund a buy down of a mortgage rate. However, before asking for this sort of seller credit, think about your likelihood of being able to refinance that home and how quickly that's going to occur. Can those credits be better used elsewhere? Or can you forego asking for these credits in order to be competitive? Just a thought as we enter a slightly more competitive market cycle. Sticking with mortgages and looking at mortgage application rates now. This is one of the biggest leading indicators for the overall housing market. The Mortgage Bankers Association surveys lenders weekly to see how mortgage applications are shaping up. So let's focus on January's headlines and really round out that period of time so we can get that full national picture of what's been happening. Survey for the week ending January 6th, applications were up 1.2% week on week. For the week ending January 13th, applications were up a massive 27.9%. We covered this massive jump last month. This jump coincided with mortgage rates flirting with entering the 5% range for the first time in a long time. For the week ending January 20th, mortgage applications were up 7%. And then for the final week in January, the week ending the 27th, applications dropped 9%. Just for context on those mortgage application rates, we have been hovering around 30-year lows when it comes to mortgage application rates, which goes some way to explaining the 20 consecutive months of year-over-year sales declines we mentioned when we looked at pending home sales. Most recently, for the week ending February 17th, we saw another 28-year low in terms of applications as mortgage rates rapidly climbed towards 7%. So mortgage application rates there largely tracking mortgage rates. So if you're a seller, keeping an eye on mortgage rates and timing when you might want to list could be a pretty lucrative strategy right now. Moving on and looking at my local market, Spokane. I believe it's so important to get a national picture of what's going on before we look at our local market, because Spokane isn't an economic island, and if this market is behaving differently to how the national market is, we need to understand how it's moving differently and why. These are actual sales for February, so just be mindful that we are comparing closed sales in February with pending home sales in January. Now, it takes around a month to close a transaction, so I'd say it's a fairly accurate comparison, but just be aware it's not a perfect comparison. Sales were down 22.8% year over year, which is less pronounced than the national year over year decrease of 24.1%, and Spokane appears to be performing better than the overall Western region's year over year decrease of 29.3%. Median home prices are down here 6% on a year over year basis, which is the third month in a row that we've seen year-over-year sales declines here in Spokane. It's worth noting though that home prices haven't just started falling here. Within the past year, they went up to a median home price of $450,000 here in Spokane around April-May time of 2022. They have since descended to their current levels of $375,000. $375,000 is significant because it actually represents a $10,000 increase from the median home prices that were reported for the month prior. So have we seen the bottom of the market? If we look back at what the economist from the National Association of Realtors said, home sales activity looks to be bottoming out in the first quarter of this year. That might just support the notion that we've already seen the bottom of the market. Or equally, it could just be explained away by simple seasonality. 1 month of data does not make a trend, but as we head into the busy spring and summer selling season, and based on what I've seen anecdotally with more buyer demand out there, I wouldn't be surprised to see if we've turned a corner. So if you're sitting on the sidelines waiting for the market to crash, it's already happened and prices seemingly are increasing again. Inventory is up to a 1.7 month supply, but is still very low. If demand is coming back, like I've suggested, then I'd expect to see this inventory consumed relatively quickly. Unless, of course, there's a bevy of sellers who have been waiting for spring to sell, like I suggested sellers should do a few months back. New listings are down 11.8% on a year-over-year basis, which isn't great. I would expect to see this pick up as we head into spring. This means that overall Spokane is behaving largely like the rest of the nation is, and you can expect macroeconomic news to trickle down and impact Spokane the way it would impact the rest of the national market. Now I wanted to move on and look at a couple of news articles that have stood out to me this month. There's a lot going on, so I want to draw your attention to a couple of headlines, and if you want to read the articles in their entirety, as always, I post my links and my sources in the description to this video. So let's start by talking about inflation and the need for future Fed funds rate hikes. Inflation in January was at 6.4%, which does technically represent 7 consecutive months of declines in the rate of inflation since its high in June of 9.1%. But it was only a 0.1% month-over-month decline from December, which led many to question if the trajectory has shifted back towards inflation. The Atlanta Fed president is talking about the need for the Fed to raise its funds rate to between 5 and 5.25%, like many others are also suggesting, but she went further and suggested keeping them that way well into 2024. Some are being even more hawkish than this, and are talking about 6% rates needed as early as July 2023 now. Just really quickly, I wanted to mention that high interest rates suck if you're trying to get a mortgage. But if you're trying to save for a down payment, make sure you're utilizing these high interest rates to your advantage. The big banks suck as always, but if you look at your local credit unions and small banks, you can get some really good rates out there. I'm seeing savings rates and CDs as high as 5%, which can really help you save up faster. Here's a major piece of news you might have missed. Housing and Urban Development, or HUD, announced it's decreasing the mortgage insurance premium that you have to pay when you take out an FHA loan. If you've been thinking about utilizing an FHA loan, then it just got a little more appealing. The lower premiums will expand home ownership opportunity by lowering mortgage rates for qualified FHA borrowers, providing critical relief from the steep rise in mortgage rates and home prices just in time for the spring buying season. Next, the Goldman Sachs CEO is suggesting the likelihood of a soft landing in terms of a recession have improved. People were talking about a major recession in 2023, and it seems like those fears are beginning to subside, which is positive news for everyone living in the United States. There are people still out there that believe a major recession is still imminent. Next, real estate iBuyer Opendoor and announced dismal results for 2022. Just a few months ago, we saw Zillow and Redfin announce similarly poor results from their iBuyer programs. It just goes to show that you cannot buy or value real estate using an algorithm, as Opendoor just found out by losing $1.35 billion in 2022 by trying to do just that. In terms of Spokane specific news, Spokane Valley is getting a new performing arts center. It's great to see this area go from strength to strength as the population grows and more begins to happen here. Sticking with performing arts, Chris Stapleton is coming to Spokane, and I was lucky enough to get tickets. They are seats up in the nosebleeds, but I'm excited nonetheless. We do get big names here for gigs. We had Paul McCartney come to town last year as well. Spokane is a cool place to live, and it's nice to see that big names are coming to us rather than us have to travel to Seattle to see these big headline acts. Now let's try and piece all this information together and summarize the market as we see it in March 2023. The big news is that inflation is trending down, but 6.4% inflation is still far too high for the Fed to begin to think about lowering its funds rate. Many are predicting more Fed funds rate increases into the 5 to mid 5% range, and many are saying that they're going to hold them there for quite a while, until the Fed can be absolutely sure that it's won its fight against inflation. Nationally, the most recent report for pending home sales show that when mortgage rates drop, it directly impacts pending home sales as they spiked recently. But even as we saw rates climb recently to close to 7%, as I mentioned anecdotally, I've been seeing a lot more buyer demand here as we head into the spring and summer selling season. So there is definitely some pent-up buyer demand and some strong underlying demand too. In terms of Spokane specifically, inventory remains very low, and prices were down here on a year-over-year basis 6%, but are down $75,000 or 16.7% since their highs in April-May time of 2022. If you're a seller, then know that buyer competition is heating up. And while we have just seen mortgage rates creep back up to the 7% range, there is still some strong underlying demand there. And as mortgage rates descend from here, more and more buyers will be able to re-enter the market. In fact, every 0.1% brings more buyers back. So you can now sell your home. It's not the best time to sell in terms of the price that you'll get for your home, but it's good news for those that were quite literally trapped in their homes, unable to sell the last few months. I have experienced multiple offer situations and have had to utilize tools in my offers that are more commonly associated with a strong seller's market, like the escalation clause recently. And I'm seeing those most desirable homes get under contract within their first week on market once again. If you're a buyer, then know that your window is closing. This buyer's market, if you can even still call it a buyer's market, is artificial and everybody knows it. If rates were 3% once again, or even 4%, we would be in a very strong seller's market, as we hardly have any inventory. So I'm more convinced than ever that we're at or past the bottom of the market now. And as inflation begins to get tamed, and when the Fed can finally drop its funds rate, we're going to quickly be back to the buyer frenzy that we saw in 2020, 2021, and the first part of 2022. And while yes, technically you'll be able to afford more home when rates are at 3% than you can now at 6 to 7% mortgage rates, your chances of actually getting the home that you want under contract will be dramatically reduced. I was there during the height of the market, and too many people bought just a home, just any old home that they were fortunate enough to get under contract. Not enough people bought the home, and I suspect they'll be selling relatively soon. So I maintain, if you are a buyer, there is still a window of opportunity to get a good price, and in the future combine that good purchase price with a good mortgage rate. But that window is rapidly closing. That's it for this video. If you gained from this video, please like and subscribe. That really does help me out. As I mentioned before, please go over and follow me on Instagram. That's where I'm most active. If you're looking at buying, selling, or investing in the Spokane area, please reach out, give me a call, shoot me a text, send me an email, and I'd be honored to work with you. Like I said, my name is Phil Wells, and thank you for watching.